Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, September 21st, 2020. I am Frank Ochoa, aka PivotBoss. Happy Monday, everyone. Here's a look at the daily time frame of the ES. One thing you'll notice right here is we finally reached the previous month's low. After pushing above the previous month's high and forming a pretty significant blow-off top up here, we got to push back below the previous month's close, which told us that this level was very important. And I mentioned in failing to hold above that level, it would open up the previous month's low. We finally gotten that level. We've gotten very close to reaching the July 29th FOMC key level, which is the 3239s. And at the moment, we have formed a multi-hour range below the previous week's low. So the previous week's low is here, and there is a nice little box that has formed over the last 4 to 5 hours there below the 3280.75 previous week's low. That's going to be the key level there to watch. If price can re-establish back above 3280s, that opens up a return back toward the previous week's midpoint. That would be about 3350, and then above that level opens up the previous week's high price, which would be above at 3419.5. So right there, that would be a return back to the FOMC key level of 3400 quarter. So overall, can the market reject this previous month's low? Can it push back above the previous week's low? If so, it could open up a move back to 3350, followed by a return back to the FOMC key level the rest of the week. All right, if we take a look here at the NQ, very similar price action right now. The NQ testing the previous week's low price. Right now, forming a range right at the previous week's low, just above it really. This is the previous week's low right here, and again, we're sitting right on that 750 level, 748, 749 right now. Can the market reject this previous week's low, this previous month's low? Because if so, that could push this thing back toward the FOMC key level above. That's 11355s, and perhaps get the previous week's high price as well. Previous week's high is 11539. So that would be about a 750 point move. If price can reject the previous week's low, you could get a return back to the 140 level. 11140 would be the previous month's midpoint, and then beyond that you could hit the FOMC and the previous week's high price. So that would be about a plus 750, plus 800 if price can reject these levels down here. So we got to see how this plays out. Again, the 845 level is going to be very important. That's the previous month's low price, 845. Price has to get back above that zone. Until then, we could be looking at some struggle down here. And at the moment, price currently testing the previous week's low. All right, let's take a look here at crude oil. Now, with crude oil, we've seen a significant expansion phase. You know, you had their narrow multi-day range here. We got the significant breakout. We were looking at this on a 4-day range basis, and we've gotten the move that got us all the way back to the breakdown point. So for the most part, we've gotten the move that we anticipated, which was a narrow compression here that could lead to a big push back up of about 5 handles, and we've gotten that move right back to the target here, back to the FOMC key level, back to the bottom of the pivot range, back to the breakdown point of the previous range. All of that has played out nicely. Now we have to see what happens moving forward. And at the moment, we have a range that's developing at highs a bit. We have a really good upside push here with the 8-period rising. So if we were to see some sort of shakeout leg to the downside and then leave a tail, that could be very, very bullish moving forward for a return back toward the previous month's close price. That's where the initial sell-off began. So right now, with any pullback here, look for signs of rejection, perhaps as low as 3927. 3927 is the previous week's midpoint, and if price gets down to that zone, it could offer a rejection that leads this thing back up. So 3927 would be very close to this 3930, which is also the FOMC key level from June. So again, if we were to drop that low early this week, that could be a buy for a continuation higher. All right, let's take a look lastly at gold futures. Right now, gold pushing to the downside here. We've had a lot of compression over the last couple of weeks. You can see this very narrow range here, this upper level here, and we've mostly hugged the 1957 half, 1957.7 level. We've also hugged the 1981.70. That's making a very narrow range here, and I've mentioned before, best case scenario for bulls would be for a downside flush followed by a rejection that leads us higher. And right now we are starting to see some selling pressure come into play at the moment. We're seeing price drop below the previous week's low, previous session's low, and we're seeing price move away from the center of this range. Again, the center of the range being 1957.70. Overall, we've seen the market hold, though, the 1910 level to about 2000 level. That's been the zone here where we've seen price drop down to that bottom of this area followed by rejection back up. So really what we need to see is a move outside this range. Can price really drive down into this lower portion of the LVN here and reject hard? If so, that could provide a very good upside move in the months to follow. If price were to break down here significantly and close on lows, that could be an indication of more weakness to come. So we're going to see how this plays out. But overall, we've seen bounces happen in 1900 and 1910 zone. So we could have a little bit more weakness here of about 20 more handles to the downside. But once that occurs, do we start to see rejection back up? Overall, we're still range bound until proven otherwise with a very good upward bias. All right, that is it for now. We'll see how this develops heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.